Hello everyone, welcome to EduTap. So in today's session, we are going to discuss a very important news article of finance that the RBI has eased the factoring regulations rules. Okay, so what is the meaning of factoring and what is the benefit of RBI easing the rules? We will understand all about it in today's session, and the RBI has described about all of this in the press release on January 20th, 2022. Okay, so now before starting the news article, please subscribe to our YouTube channel if you are new to the channel and join our Telegram channel for the PDF of this session. And you can get the link of the Telegram channel in the description box below. So now see, RBI has eased the factoring regulation rules, and this is to enable more firms to participate in the business. Okay, that is, see, first we have to understand that what factoring is. Once you understand the factoring, then you will be able to understand that how is it benefiting different businesses, how is it benefiting different firms and companies. So first of all, this will help the MSMEs, that is the medium, small and micro enterprises, as they will be able to raise the money. Okay, so let's understand factoring first, and then we will be able to understand that why RBI has eased the factoring regulation rules. So starting with factoring. See, factoring means that you are selling your invoices. Here the seller is there. Let's say it is some MSME that is selling some raw material. Okay, it is selling some raw material and it has sent the goods to the buyer. And the buyer can be any other big firm, it can be any consumer, we can say. So it has, the seller has, MSME has sent the goods XYZ to XYZ firm, that is a big firm. Now the firm is saying that I do not have money to pay you right now, so send me. So raise invoice and I will pay this bill. That is, raise the bill and I will pay this bill after 2 months, or let's say after 3 months I will pay it. Okay, and they have been doing business for so long that the seller, the MSME is saying that okay, I will raise the bill and pay me after 3 months. So now, but what happens that the MSME needs the money right now, that there is some thing that came and the MSME needs the money right now. So now there is a third party. There is a third party, that is a non-banking financial company, let's say. Okay, that is a factor. So now the seller is going to the factor and saying that okay, I will give you the bills, okay, on which that is receivables. The bills are the receivables on which the seller can raise the money. Okay, the seller can get the money. The seller is going to get the money on these receivables. So the seller is saying I will give you this receivables on which I am going to get 1 lakh. So instead of giving me this 1 lakh, just give me 90,000, and the 10,000 that you will get from the buyer after 3 months, that will be your profit. So it is like the factor is paying. So factor is the NBFC who is getting these bills, the receivables from the seller, and it is paying 80% of the invoice value immediately. Okay, so that is the benefit of the factoring, that the MSMEs are providing their goods to the buyer, but buyer is not able to pay right now. So the buyer is saying I will pay after 2 months or I will pay after 3 months. So the seller is going to the factor that I am giving you these bills, I am giving you these receivables or the invoices, and give me money right now. On some discount, give me money right now, and later on you can get the money from the receivables from the buyer. So factoring is a financial service that is provided by the financial institutions, let's say NBFCs, that is non-banking financial companies, in which the business entity, that is the seller, is selling its bill receivables. Okay, so the seller is giving the bill receivables to a third party, that is the NBFC or any other financial institution at a discount. At a discount means, of course, the NBFC needs to raise profit now, otherwise why will the NBFC take the risk? So at a discount means if the bill is of 1 lakh, you are only giving 90,000. Okay, the NBFC is only giving 90,000 in order to raise funds, because the MSMEs need the funds right now. So the business entity, that is some MSME, that is some seller, is raising the money through the bill receivables. I hope you have understood this. So now this is the whole process of factoring. First, the supplier sends the invoice to the recipient, that is the buyer. So the seller is sending the invoice to the buyer. The buyer is saying, confirming the invoice that yes, I will give you the money after 2 months or after 3 months, let's say. Okay, that I will give you the money. So the supplier now chooses invoices for which he wants to receive money immediately. So now the supplier is saying that I want the money right now. So the supplier sends invoices to the factor. So this invoices or the receivables is sent to the factor, and the factor analyzes that are they really true, are the invoices really believable. So it analyzes and presents the financing conditions. It tells you, okay, that is, it is a 1 lakh of bill, invoice is of 1 lakh, but I will give you only 90,000, or let's say I will give you only 80,000 if it is 80%. So the supplier is accepting that, okay, I need the money immediately right now, so okay, I accept the conditions and the orders of financing, and the factor transfers money to the supplier's account then, and the factor, the profit, the discount we can say, that on which the factor is giving the money, that is the profit of the factor. I hope you have understood the process now. So now RBI has eased the factoring regulation so that more firms can participate in the business. The MSMEs can have, like, MSMEs can be relieved that I will get money immediately even if I am raising the invoices, as well as there will be more NBFCs that will start participating in this factor system. Okay, right now if we see, only 7 NBFCs, only 7 large NBFCs are participating, are being the factor. They are providing the factoring services. So only 7 NBFCs in the whole country. So the RBI has said to increase the number of the NBFCs that provide the factoring services. RBI has said that all existing non-deposit taking NBFC ICCs, that is non-banking financial companies, that are the investment and credit companies. Okay, so that are the investment and credit companies that have asset size of more than 1000 crore or above 1000 crore, they will be permitted to undertake factoring business subject to some satisfaction of certain criteria, like they are following the regulatory norms or not. So such criteria will be there, and they will have to be the NBFC that are investment and credit companies, and that are of 1000 crore asset size or more than 1000 crore asset size. So RBI until now, what was the condition until now? That RBI only allowed NBFCs whose primary business was factoring receivables. Okay, and there were only 7 NBFCs in the whole country, 7 large NBFCs in the whole country, those whose primary business of factoring receivables. That means that 50% of their balance sheet was for factoring. 50% of the balance sheet consisted of factoring related assets to offer factoring services. So until now only 7 NBFCs were allowed, as they had like this was the criteria before, that you should have like 50% of your balance sheet that consists of factoring related assets. Okay, so now it has been said that these NBFCs will also be allowed, so it will increase the area, it will increase the NBFCs into the factoring services. That will help the other businesses to raise the funds. So a statement that is given by RBI, we will see that the new rules, which is effectively easing of the existing regulation. So existing regulation has said that 50% of your balance sheet should consist of factoring related services, and that only until now only 7 NBFCs were able to fulfill this criteria. So easing of the existing regulations has been done, and this will increase the number of NBFCs that are eligible to undertake factoring business significantly from 7 to 182. So from 7 the number will increase to 182 because there are many NBFC ICCs that have the asset size more than 1000 crore or that have the asset size of 1000 crore, as well as the other NBFC ICCs that can also undertake factoring business. If they do not have the asset size of more than 1000 crore or equal to 1000 crore, then also they will be able to undertake factoring services, factoring business by registering as NBFC factor. So they have to register as NBFC factor to take out the factor services if they are not following this criteria then. So eligible companies can apply to the Reserve Bank for seeking registration under the Act of the Factoring Regulation Act of 2011. So they have to, the eligible companies that are eligible, they have the asset size greater than or equal to 1000 crore, as well as they are taking the role of the NBFC factor, they are registering as the NBFC factor. So they those can they can apply under the Registration Act of under Registration Act. So Factors Regulation Act, what this act is, because they will be getting the registration, they will be getting the registration under this act now. So what is this act? So government amended. See, under this act, what is the that factors can get regulated. Okay, the NBFCs that are acting as the factors, they will get regulated, as well as the government has amended the Factoring Regulation Act in August 2021, recently only, I must say, and it has widened the scope of companies that can undertake factoring business. So the government has shown that we want that the factoring business should expand. The act permits, the trade discounting the receivables. The trade is happening of receivables now and discounting system. So TREDS is the trade receivables discounting system, and this is the system, this is the online platform that is provided by the government to file the particulars of the assignment of receivables, that how much the receivables, how much the bill is of, how much you are paying. So, and receivable transactions with the central registry. So you are filing your filing your receivables with the central registry on behalf of factors. The TREDS is doing it for operational efficiency. So you have to file your receivables. Okay, the factor, okay, the factor, that is the NBFC that is providing the factoring services, it has to file the receivables with the central registry, and this is done through TREDS. Which is a online platform provided by government. The act empowers the Reserve Bank of India to make regulations related to the prescribing the manner of the grant of certification of registration, that who will get the registration. So that is decided by RBI, as the act has empowered the RBI to take such actions, and for prescribing the manner of filing of assignment of receivables transactions by TREDS on behalf of the factors. So RBI will be making the rules, RBI is prescribing that how you can get the registration or not. So all of the factors are coming under the RBI itself. The act is made by government though, and it is amended by government. So recently in January 2022, 20th January, the press release came from the RBI, and RBI has recently eased up factoring regulation rules to enable more firms to participate in the business of providing the factoring services, as well as more MSMEs will be able to get the services, as there will be more NBFCs that will be providing the services. So what asset size is defined by RBI for all non-deposit taking NBFCs to get permitted to undertake factoring business subject to satisfaction of certain conditions. So you have to tell this answer. I hope you are easily able to answer this question now. So thank you very much. If you have any query, you can mail us here, you can contact us through this number. Thank you.